So, g'day everyone. Slight technical issues, which is my life at the moment. We are not going to do a Facebook Live. Rob has graciously agreed to film this, record this, and then we are going to upload it. And then you can actually see it. Any questions, let us know, and I can answer them, or if I can't, we'll get the darling Rob to actually answer it, and we'll go from there. So thanks, Rob, for actually joining me. This is something I'm quite passionate about, Tax Management New Zealand and the service that you provide. Do you want to tell us a bit about you and what it is that you guys actually do?
Yeah, absolutely. Thanks so much. Hey, I'm Rob. I'm the client care manager here for Tax Management New Zealand. Yeah, thank you, Haylee, for letting me come on and share the benefits of tax pooling. So what we actually do, we essentially buy and sell tax. It's quite niche. It's a little bit confusing, and there seems to be this this misconception that tax pooling is only for large businesses, large organizations, and I just think that's because that the concept itself is quite hard to grasp at first. And what I like to do is try and relate it to something that we do on a daily basis. And so the example or anecdote that I'm going to give here is in regards to filling up your car at a petrol station. So bear with me as we go on this journey. So just picture that TMNZ is this big old petrol station. Okay, and there's nothing in the tanks just yet, but along comes all these big tanks of petrol. So these are your large corporates, big organizations, funders, these kind of guys, and they're going to dump their petrol into our petrol tank, right? And so all the fuel that's going in there, it's not actual petrol, it's tax. And the tax that's going to this pool is all going to be time-stamped, okay? And so this will create an inventory of different tax dates in this big old pool. And so these organizations, they've put their tax into the pool, and they may use it one day for their own obligations and liabilities and their revenue, or they may not. And so they may look to use that for an alternative. And so they may look to sell it to other taxpayers, okay? And so just imagine, you got your other business, doesn't matter what size they are, they're coming along in their little car and they see the TMNZ, tax petrol station. And so they'll pull in because they're short, okay? They've still got liabilities that have passed and they're outstanding and they're incurring interest and penalties at inland revenue. And so what they're going to do is that they're going to exchange cash today, their money today, and they're going to buy tax. And so essentially they're exchanging money and buying old dates that have already passed. And so they will fill up their tax obligation at a date that they need, and they can drive their car out of the petrol station and continue growing their business and continue on the road of what they set out to do. That is essentially what we do. So we create a platform for supply and demand of tax. So we buy and sell tax.
It sounds, I sort of was thinking the other day that it's very similar to, what is it, Afterpay, that ad the other day, you get your abs now in 6 weeks to do the sit-ups.
Yeah, absolutely.
Essentially, that's what tax pooling is we'll pay you tax for you as at the due date. Yeah. And you can just pay it off. So yeah, exactly. HP, lay by your tax.
Yeah, yeah. And that's why we exist, right? So New Zealand, they've got a pretty regimented tax schedule. You're expected to pay tax on specific dates. The most common ones, you've got 28 August, 15 Jan, 7 May. And if you miss those dates or you don't pay enough, you're going to get hit by interest and penalties. And the unfair thing about it is that businesses, their business model doesn't line up to the tax dates that IRD has set out, right? And so their cash flow can come under real stress trying to pay these amounts on specific dates. And that's why we're quite an attractive solution, because we provide flexibility and more time so that taxpayers can still be compliant, and they won't be chased up by any sort of debt collection notices, right? Because they are going to be a compliant taxpayer when they set up an arrangement through Tax Management New Zealand.
And I think that's one of the big things. Like, a lot of my clients use it because it's just a weekly payment coming out of their bank account and their tax is sorted. And if we need to pay more, it's not that big a deal, we can fix that up. That takes the stress away, really.
Yeah, exactly. So you can pay what you want, when it suits your cash flow, right? So you could put in, $5,000 one week, $2,000 the week after. It doesn't really matter. We don't have any obligations. So you could set up an arrangement, set it, forget it, pay it way down the line, or pay it off as quickly as possible. It's completely up to you. If you don't want to use tax pooling anymore, we're not going to chase you. Because at the end of the day, if you don't pay your tax and you don't do it through us, you still have an obligation, you still have a liability at Inland Revenue, and sometimes they can't be as nice as what we can do. That's what it comes down to.
And I would have to say you guys are quite nice, just about to pick up the phone. The big question though is, how hard is this? Like, tax is quite challenging.
Yeah.
If your accountant doesn't actually use tax pooling or something like that, what are the options?
So anyone can sign up. So you don't have to do it through an accountant. It is quite easy to use. So we've got an online dashboard or portal, which I'll definitely take you through in just a little bit, just to show how easy it is to actually sign up. But yeah, if you know what your liability is going to be, it's as easy as registering, logging in, creating yourself as a taxpayer, and then setting up an arrangement, and then choosing when you want to pay and how you want to pay. That's all it is. That easy. So should we get into that now, or?
Yeah, let's actually do that. So one of the big questions I hear all the time is, it sounds like it's too good to be true. Like that box of chocolates where you're not going to get put weight on. Is that sort of the same thing here?
It is too good, but it is true. So it is built into legislation, so you can check it out on the Tax Administration Act or Income Tax Act. There's all sorts of stuff in there in relation to tax pooling, so we're IRD approved. So there's no sort of, this is a scam or anything like that. We use a custodian by the names of Guardian Trust, and so they handle all of the transactions. So we don't actually touch the money that comes through the pool ourselves. We're not allowed to do that. So we have to seek to do that through the custodian. Cool.
Okay, show us how easy it actually is.
Very cool. So hopefully everyone can see my screen. So I'm just on the TMNZ website, so tmnz.co.nz, and I'm just starting out, so we'll just pretend that I don't have an account with tax management at this stage. So I'm going to look to register, okay? So you just click this button, up comes a form. Everybody's quite familiar with the form, I'm sure. So I'm just going to start putting in the details that are required. So first name, last name, email address, very important. Train webinar. It's not a real email address, everyone, in case you're trying to email me. Phone number. So this isn't mandatory, but let me tell you, it's really useful if you do put it down, just in case you want to get in touch. So just remember that you can put it in there. And then we'll pop in a password, making sure it is very secure and compliant with our privacy requirements, as we are a financial service. So just chuck that in there. Now this next question is quite important. So it says, I work for an accounting firm. So this will determine if you're going to register as a tax agent, if you answer yes to that question. And what that means is, if you register as a tax agent, then we'll need to connect you to an accounting firm that's also registered through tax management. So that can be accountants themselves, bookkeepers, anyone that's registered to be a tax agent for others, really. Then if you click no, you're essentially registering as a direct taxpayer, okay, or a corporate organization, that you're not part of an accounting firm. It's quite important that you do get that right, because we do have different features on the dashboard once we get into it. For the time being, though, I'm just going to put no to that question. And I heard about us, or from TMNZ, I should say, from my accountant. So I'll just pop that down as a referral. Of course, I want to sign up for news and notifications, because TMNZ always sends out really good stuff. And I have read the terms and conditions, I promise. And hopefully I'm not a robot, although I may come across it as I go through the dashboard. So I'll just go ahead and let's just pretend that I'm signing up with this email address, okay? So the next step that happens after this is that a verification email will get sent to the email address that you're registering with. It will just say, you know, please click here to confirm that you say who you are, right? And then it's going to take us to the TMNZ dashboard. So we'll jump into the dashboard right now. Okay, so this is the home screen of the TMNZ dashboard. And the absolute first thing that we're going to do is that we're going to change some personal details, okay? So in order to do that, we need to go to the right-hand side, top right-hand side, where it has this little arrow next to my name. We're just going to push that and then hit My Details. That's going to bring up my details in here. All right. Generally, that would pre-populate, but for some reason, it hasn't as I work through this with the details that we would have registered with, right? And then it says date of birth. And so I definitely want to put in a date of birth here. The reason why we want a date of birth against myself is that when we receive money for an arrangement and we want to transfer it to inland revenue, we need to comply with the AML standards. And what this means is that we need to know our customers. So we need to do a form of customer due diligence. And what we need for that is a full legal name and a date of birth. And that's all we need to prove who we say we are. So it's not that stringent. It's not too much to comply with, but it's good to get that out of the way as soon as you register. So I would encourage you to do that. And we'll talk a little bit more about that as we go on. So once we've put in those personal details, of course, I want those newsletters. Yes, please. We're just going to update them here. It should say that it's saved. Of course, when you want it to work, it doesn't.
Looks like you've suddenly got my technology bug that I've had.
All right, we'll just work with it. We'll just work with it. That's what we do. We're professionals. Oh, lovely. And so there goes the error page there. All right, moving on. So let's just pretend I've put in my personal details. I've got my AML sorted. We want to add a taxpayer. So once you've done that, next step is to add a taxpayer onto the dashboard. So we go to the quick links and we can see a few different options here. Add taxpayer. All right, so we're going to click that. Bring it up here. Chuck in the name. Put in an IRD number. All right. It just doesn't seem to be loading. So what we're going to do, we're just going to refresh this page. Decided to kick me out.
So while you're doing that, so you create you register for an account, and that gives you the dashboard. But then you've got to register as a taxpayer within that account. That's
right. So if you are registering as a direct, in the registration process, you can register an account as well as a taxpayer at the same time. So it does help to do that there and then. Sorry about these technical issues. This was working all fine before.
Oh, welcome to working with me, Rob.
I know. Thank you, Haylee. So we'll just jump back in. Let's check here. Oh, here we go. This looks like it's working now. Very good. Chucking that. Voila.
Now we're away.
Okay, so this must have been the timing issue there. Riveting on too long. All right, so getting back to adding the taxpayer, which is myself. All right. So in the live environment, I am using a real IRD number there for me, so don't steal it. So what we got here, taxpayer type. This is important again for AML reasons. So we've got a couple of different options here. So the main ones that we use are probably the first three. We've got individual, company, and a trust. If I was looking to set up a company, it would ask me to put in the NZBN number. And so what happens is that when you put in that number, we've got an API to connect to the company's register to pull information down about directors. So again, it's about knowing our customer. Or for an individual, what happens is that box changes to a date of birth. So that's asking for the date of birth of the taxpayer. But since I've already updated the date of birth for myself as the person acting on behalf of the taxpayer, I don't actually have to put that in there. We could leave that blank. And so what it means, if I'm updating the date of birth for me, if I add multiple taxpayers, again, I wouldn't need to put in their dates of birth because I've already got it for me. So that's a nice way to get around that one there. You could, if you wanted, not put in your own date of birth if you're not comfortable with that, and you can just populate the dates of birth of your taxpayers. So that's fine as well.
So this could actually be, let's say we've got a husband and wife team, they've both got income tax owing, because that's the only real tax that we can do this for using tax pooling. Then we could have the darling wife who normally does everything. I'm going to be shot by many husbands now. Actually set up the register for the account and then actually deal with the husbands through here as well. So we don't need two separate accounts, do we?
No, that's right. So you can only have the one account if you would like, and then that person can just receive the correspondence and be that person of contact for the husband and the wife and whoever else they may be handling their tax pooling with. Absolutely. The other cool thing is, which I'll show you in just a bit, is that when you do set up a taxpayer, if you were an accountant, or you were the husband, and the wife for whatever reason wanted to also look at what was going on but not get involved too much, you can set them up, and then they could be a read-only account. And so that means they could go into the dashboard, see what's going on with the payments and with the arrangements, but they won't be able to to change any details, and they can receive the correspondence as well. So there are heaps of different ways that you could roll this out to suit your situation, right? So just a little add on there. So with the industry, I'm in construction. I feel like being a construction worker, GST registered, and then I'll choose my balance date, and I'm just going to use the most common one, which is end of March. Now, terminal tax date. This is super important when it comes to tax pooling. So you can only use tax pooling for any open year or income year 75 days after your terminal tax date. So if you get this wrong and you try and use pooling and you're outside of the deadline, unfortunately, you wouldn't be able to use our services there. So you need to make sure that you are recording the correct terminal tax date. If you're unsure, it would pay to check in with your accountant just to make sure that you're selecting the right date. I'm going to go with 7th of April because I've got extension of time as I have an accountant who helps me out. And then I want to choose my prof tax basis. And so you've got a few different options here. You've got standard uplift, which is pretty common, estimate, ratio method, and then AIM. And you may be thinking, why is AIM on there? I thought I couldn't use tax pooling for it. You can use it in very special circumstances. So you can use it for a terminal liability, or if you're doing a reassessment or audit. So it is there in case you do need to use it. But I'll just go with standard uplift. And I have 3 prop dates, and we've already talked about these before: August, Jan, May. And so we'll just roll on through, and we'll say yes, continue. It's just saying that I've already got this set up there, but we'll just pretend I'm making it. Okay, congratulations. I have registered my taxpayer. And so the next logical step is to add a transaction to that taxpayer, right? So you're obviously registering them for a reason, and you want to set up an arrangement. So we're going to go ahead and do that. So we'll just click here. Good news is it's already populating with my own details as I've just registered that taxpayer. And I've been a bit naughty and I've missed some of my 2021 income tax. And so I'll just select the tax year here, 2021, and then the tax type is income tax. You can do different tax types, but again, that's only in the event of a reassessment or audit that we can do different tax types. But our bread and butter is income tax. So we're going to stick with that. So what happens is asking me, what tax do I have to pay? And the cool thing is that it pre-populates the prof tax dates that I've already entered in for myself here. So all I need to do is just go ahead and enter the amounts. So that's how easy it is. And these amounts are completely made up. I'm just going to check in
And you can get those amounts from either your accountant will give you a sheet to say this is how much you've got to pay and when, or log into my IR and actually see the payments.
Yeah, absolutely. So it is quite easy to get this information. If you do get stuck, just feel free to give us a call as well. We can help you walk through how to get this information. We've got some easy step-by-step instructions to help pull down my IR statements, just to take the pain away a little bit. Because we want this to be as simple as possible and remove as many barriers to entry as possible. We want taxpayers to use this and have the flexibility of pulling. Okay, so 7 April 2022, I don't have a liability there, so I'm just going to get rid of it. And you'll notice this little tick box, and it says LPP. So like any industry, we love acronyms, and so LPP stands for late payment penalties. And basically what this does, if you have it ticked on the reminders that we generate when we set up the arrangement, it's going to show you the savings that you have on the arrangement. So it will calculate interest saved through using us, as well as the late payment penalties saved, and it'll give you a little total there, just so you can compare and see how much value tax pooling can actually bring to the table. Okay. All right. So now we've got this verification box here, and it says, please confirm that the amounts you're requesting to be transferred to the taxpayer's IRD account are the same or less than the taxpayer's actual or forecast tax liability. So a bit of jargon there, I guess you could say. All we want to know is there a liability existing at inland revenue, or is there going to be a liability there in future once you file? So as I'm on an agent account, so I'm a registered tax agent, I only need to hit yes, and then I'm good to go to confirm liability. If I was on a direct login, so not as a tax agent, there is one extra step that I would need to do, and it's actually quite timely when Haylee was saying that to find out those amounts, you can, get it from your accountant or pull down a MyIR, because we require proof of a liability that exists for a direct taxpayer. And so what would happen is that you would hit yes, and you would have to upload the document onto your dashboard here. That's just one extra step if you are a direct taxpayer. Sorry about that. This is something we have to do.
I think just for everyone's awareness, is if you actually pay money through to tax management doesn't actually hold it in their hot little hands. The moment that you guys get the money, you send it on to inland revenue, and if there's no debt there, inland revenue pays it back to the taxpayer. So essentially it just goes round and round in circles. So that it is actually quite critical that there's a debt there waiting to be paid. Yeah,
absolutely. I don't think anyone in their right mind would actually try and launder money through us as it's going through to inland revenue. That would be pretty silly, but good on you if you're trying it. But yeah, so we'll just stick to that and carry on. Okay, so what we have here is a payment plan. So it's asking you, how do you want to pay for your tax? And we have two different product types, I guess you would call them. And essentially that determines how you are going to pay for your tax. So we've got the flexi tax and the finance plan. The flexi tax plan, it's kind of intuitive in the name, so it's flexible. So this is the arrangement that you can just set up, forget about it, pay what you want, when you want, and chip away at your liability. And what happens is that each month we'll usually have one payment day, and we will calculate interest to that payment day. And so what happens is that when you pay, we'll reconcile that payment against your arrangement, and we'll recalculate the interest and core tax that's left over on the arrangement, and we'll effectively push it out to the next payment day. So you always know how much you've got left to pay when we send out the reminders, and you can just chip away at that at your own leisure. As I said, there's no buying. You don't have to fulfill the arrangement. You can cancel at any time. It's completely flexible. And the interest rates for these ones, it does vary. So it will go anywhere between 4.5% through to about 5.5%. Just depends on how much you're buying and how long it takes you to pay off the arrangement. But when you compare that to inland revenue, the use of money that they charge on interest is currently 7%. So there are good savings here. And just remember that we will transfer on the date that you buy, which means that the late payment penalties that you'll see at inland revenue will also be remitted. So that's an additional saving as well that's not really shown here. Not until we get into the reminder itself, you'll be able to see a breakdown of that. For the finance plan, this one's a bit different. This one's really good for businesses who are great at forecasting. So if you know your cash flow very well and when you're going to have cash on hand, it's really useful to set one of these up and defer the whole liability to a specific date. And you can just push that out, whenever. You can choose a custom date too. It's all good. But the difference about this one is that you have to pay the interest up front. And so that will essentially lock the arrangement in place. So with these ones, they do usually have a lower interest rate in comparison to the flexi-tax plan. But that is because you are paying money up front. You are locking in that arrangement. So there can be some downsides to this. And so that's why I said that this type of arrangement is really good for businesses that are great at forecasting, because if you set up an arrangement that's for $50,000, but then you file and you realize that, oh gosh, I actually only need $30,000. You've paid interest on 50 grand, and you're probably not going to get that money back. So we'll just advise you of that. So be warned, make sure you choose the plan that is best for you. You'll notice here on the right-hand side, there's one that says create a custom plan. So this is relatively new for us. So if you select that there, you can create a custom plan based off these two products, the Flexi or the Finance, but it will allow you to pay in equal installments. Now this one here is really good for getting people in the habit of paying a regular amount on a regular basis. So if you're struggling with cash flow and you want to know how much money you need to set aside each frequency that you choose, this would be the option for you. So you can choose between weekly, fortnightly, monthly, or even quarterly. So I'm going to go ahead and select monthly. That works best for me. And then we're just going to choose the first dates of when we can pay. So it gives you a whole bunch of preset dates. You don't have to use that. So you can choose my own date. Now I'm going to set up this one to start 6th of July. That sounds good to me. And then I want it to end, in December. And then I'm going to put that money after the 6th of December towards Christmas. Sounds good to me. And so I'm going to pop that in here, add. And then you can see that arrangement that I've just created up here has jumped down here. And so I know that I want to use this arrangement. So I don't need these other ones up here. These ones are just placeholders. So we're just going to remove them. They're no longer required. And I'm going to select this arrangement. And it gives you a little summary of what's going on here. So if you remember, we were buying $10,000 at August, January, and 7 May. So that's $30,000 worth of core tax. And it's saying to me that the interest on that, if I pay my last one on the 6th of December with all the other installments all going through as planned, that the interest on that is going to be $1,106. And so each installment, all 6 of them, the amount to pay is $5,184. And so if you're, the taxpayer, the person who needs this arrangement, you could go to your bank and you could just set up an AP to TMNZ to put those payments in place. So you can just set it and forget it, and it's easy, done and dusted. All right. So if we're all happy with that, we could either save it as a quote and look at it later, but we're just going to progress with this one. Okay, so the next step is now the liability summary. So what this is doing is just giving a summary of what we've just put through before. And you remember that little LPP box that we ticked? This is what would display there. So you get this net savings over using inland revenue. So that's what the LPP box is bringing up here. So it's saying that we'll save $348 on use of money interest, since our interest rates are lower than inland revenue. And then it's also saying that since we're paying on time, there won't be any late payments going through. So we're saving $1,500, giving us a total saving of $1,860. And here you just see this, the brief summary of the arrangement that we put through. You can edit it if you would like, but we're all good there. Okay, and those are the payment details that we put through. So again, it's just summarizing all the stuff that we've gone through. And then down here, it's saying select your transaction contact. So this is who you want to send the reminder to. So currently it's defaulting to me because I'm the listed contact on myself as a taxpayer. So I would go ahead and email it to me because that's perfect. But you can add multiple contacts if you wanted. So there could be that husband and wife situation. It could be the accountant and their client. So you can add multiple people on here so that they can all get a copy of the arrangement, and it'll save you having to, forward anything on later down the line because they would already have it. So you don't have to worry about it.
And I highly recommend, if you're going to set it up as a business owner, actually send it through to your accountant. So that we can make sure that we've got the systems running correctly at our end as well.
Absolutely, absolutely. And so once you're happy with those details, you would literally just go ahead and save the request. Once it goes through, lovely, save successfully. Okay, so that's done and dusted. Okay, so we've got that in place. But what if you needed to make changes? So maybe as a business owner, you've sent it through to your accountant and your accountant has said, mate, you have put in the wrong amount. Can you please change it? You can actually edit these arrangements at any stage. So what you would do is that you would make sure that you've selected yourself as a taxpayer on your dashboard. So you can do that by typing your details here. So you just pop in your name. And then once you've selected it, you'll get a pre-population of the details for yourself. And then you want to come down to this activity center, okay? And you want to look at the transactions. So you just click on the transactions tab and it will show you the arrangements that you set up for yourself here. So saying that we've got a flexi tax installment, that's the one we just did. It's pending payment because I haven't paid anything towards it yet, but my accountant is telling me that I've got the wrong amount. I'm like, better get that fixed up. And so you can expand it to see all the details. But if you want to edit it, you just go to this action little tab here. I guess you call it the 3 dots. It's got a special name. I just call it the 3 dots. And then once you hit that, it gives you different actions that you can do. And so if you wanted to edit your arrangement, you'll just click here and it'll bring up the details and you can just change it, to whatever you like. And you would just go ahead and then save the request just like we did the last time. So that's how you would do it in regards to editing the arrangement. This arrangement may not be needed, so you may file and it turns out that you don't have a liability owing for this particular income year. So you could just go ahead and delete it. Tax not needed. It's just asking me for a reason why I'm closing it, and you would just hit confirm. And now the arrangement is gone, no more. So that's how easy it is to register, to set up a taxpayer when you're not having any sort of technical difficulties, and then putting an arrangement and editing those details. Really simple to do once you get the hang of navigating. But that's it. So you can just come into your dashboard anytime that you like, add an arrangement, change details, add new taxpayers with different contacts. You can do everything that you want in your TMNZ dashboard. All right.
There's really valuable ways to actually do it. So let's say, for example, you've had a boomer 21 year, like some companies have actually had a successful year in 2021. They've got major tax to pay, which is then going to impact in their provisional tax for 2022. We know they're not going to produce the same results. I'm apologising because a baby chicken has walked into my office. And we can actually set up the prov tax, not make the payment because otherwise it's going to kill our cash flow. And at the end of the year when we file, we then can actually pay what is needed. So really good options available. Is there any other reasons why you would actually use this? Have you got any examples of really successful tax management New Zealand usage?
Yeah, absolutely. I think the best use comes down to seasonal businesses. where cash flow goes up and down, but they know when it's going to go up and down, right? So I'm talking about like logging companies, fruit picking, I would say tourism, but they're kind of struggling at the moment. But usually when they're back on track and no COVID, they'll have massive peaks in the summertime when they're trading. And so their prompt dates, they won't fit to meet their cash flow, right? So I'm talking about 28 August, but they're not going to have any cash flow at that time, and they want to retain as much money into their own business to ensure that they've got everything that they need to get themselves through that busy period. So they want to invest in themselves so that they can grow and prosper, right? And so a really good way to use tax management is to set up an arrangement for August and then look to defer paying it, maybe around March, that time when they are cash rich. So what that does is that it won't impact their business. It won't be like a huge strain on their business. They're still going to be a compliant taxpayer since they'll be purchasing it on the date that they need, but it just gives them that flexibility to pay it when it suits their needs. The other good thing about tax management as well is that I think we talked about with the small businesses, right? If they're just chipping away at the arrangements, and the Inland Revenue knows when you have set up a tax pooling arrangement, you're not going to get those debt collection notices. So it does take the pressure off there. Also, if you've got GST, so you've got a GST refund that's about to be issued, sometimes if you have a liability for income tax, that GST refund will get transferred over to your income tax. If you have an arrangement set up, that won't happen. So you'll be able to retain that money and actually get it refunded to you, which is a really good benefit. And then also the interest that you pay through TMNZ for your arrangement is actually tax deductible as well. So once it's been transferred through to Inland Revenue, so they've recognized that you've used tax pooling, you've paid interest on it, you can look to claim it back in the year that it was paid. So that's another good benefit that I don't think many people actually know about.
No, so make sure you do tell your accountant what it is you're up to. The one thing, and it's interesting, you said before, once Inland Revenue know, how does Inland Revenue know? Like,
how do they know? It's an old trade secret. So what happens is that when a taxpayer sets up an arrangement or they're depositing money into the pool, we know that, right? So we can recognize activity that's going on in the dashboard. And so we will upload what we call a schedule, trying not to use too much jargon here, to Inland Revenue. And what that does, it puts on what's called a tax pooling indicator onto the taxpayer. And so that will sit on Inland Revenue's record. And so they'll see that this taxpayer for the 2021 year, because it's income year specific, that they're using tax pooling for that year. So that's how they would know.
So it's not, you can't just ring IRD and say, I'm using tax pooling, don't collect any debt from me, because you guys need to tell IRD that we're actually in a relationship together.
That's right.
And you're taking care of the debts that IRD doesn't need to.
Yeah. So if you do use tax pooling and then for some reason you get hit with a debt collection notice, don't contact Inland Revenue. You can look to contact us, TMNZ, and then we can liaise with Inland Revenue just to say, like, hey, look, they've got an arrangement in place, here's the proof, should be all good to go. So we can handle that request for you, because sometimes it can be quite difficult to get through to Inland Revenue.
Cool, well and truly. And so contacting you, is it as simple as just your little pop-up chat box down the bottom on your website?
Yeah. So there's a couple of ways that you can get in contact with us. The good thing about TMNZ is that we've got the most support staff. So we've got about 10, 11 people in our support team that can handle all sorts of queries. And so we're open from 8:30 to 5:30 on a 0800 number, or you can email through to support@tmnz.co.nz. Or, as you've pointed out here, Haylee, if you are on the dashboard, we do have live chat as well, and this is monitored throughout the week as well. So you literally just type in, like, hi, I need help with setting up an arrangement, and I would hit enter. They'll get sent through to the support staff, and they will get back to you very quickly with fresh with the chat mechanism here.
And what I love about the your support staff is they don't make you feel dumb.
Yeah.
You know,
yeah.
even as an accountant, sometimes I have blonde moments, and I'm pretty sure they're thinking, "What are you usually on about?" So, really helpful, really supported, and incredibly easy to do is to pay tax on your own terms, essentially.
Yeah, absolutely. No, thank you for the praise there, Haylee. I'll make sure to pass it on to the team. They'll be very grateful to hear those nice things.
No, so that's cool. So thank you very much for your time. I think you've actually given a really good overview. I think more small businesses actually need to know about tax management.
Absolutely.
You know, it's even for accountants. I'm finding a lot of accountants actually aren't fully across the service that you provide. And I know when I actually worked at Inland Revenue, this was something that I dealt with back then. So for a small business owner to be able to have the flexibility, take the stress away of paying tax, Tax Management New Zealand is actually fantastic at doing that. So I'm going to thank you very much for coming. And if I've got any questions or if anyone contacts me, I'll definitely forward them on to you guys.
Absolutely.
And thank you so much for doing this for me today.
No worries. Thank you so much for the opportunity as well. Like you said, I think so many more small businesses could be utilizing tax filing. It's not just for the big fish. Anyone can do it so long as you've got a liability to pay. Feel free to reach out. We'll happily help you out, walk you through, getting you set up and good to go.
Awesome. Thanks, Rob.
No worries. Thank you so much. See you later.